So accounts receivable, the entire process of accounts receivable basically is all about the customer sales and the resulting activities that is part of the customer sales. Okay, so as part of the customer sales, the entire process begins with the ordering. Ordering activity. So the entire process, you can see, it is called as order to cash cycle. Okay. Now, in the ordering life cycle, the first process, as you are aware, it is called ordering. Okay, or where the underlying document that is raised as part of ordering is the sales order, similar to what we had the P2C cycle, right? P2P cycle, sorry, procure to pay cycle. The same way we call it order to cash cycle, where it starts with sales order. Okay, the ordering activity. Okay, now sales order, whenever a customer raises a sales order for any particular item that you are trading in, or maybe you're dealing in, with respect to that, there would be certain scheduling activity, scheduling as in, when the particular item needs to be delivered, and all those certain aspects related to that, that is input as part of the and that is processed as part of the ordering cycle. Okay, and then finally the shipping activity happens, and then the bill presentation. Okay, so these are the activities that happen in the initial stages or initial phase of the order to cash cycle. Okay, so basically all about ordering activity. Okay, once the customer gets the particular shipment, as it is called, okay, along with all the shipment documents, the goods delivery note, and as well as the invoices, all those activities happen, right? So in Oracle, what happens is, as soon as the shipping is being done, okay, in Oracle ERP, that shipping, whatever has been done, is actually, for that an invoice generation activity happens. Okay, now that invoice generation activity from the order, so basically order is being performed, or the ordering, the scheduling, and the shipment activity that you see here. Okay, these three things, basically it is performed as part of the order management module. Okay, like we have in case of P2P, we have the procurement module, right? The same way, the entire activity related to ordering happens in the order management module. And once the shipment is being done, the goods are basically sent out. The invoice, the basically the ordering, the order management person who is working on the order management transactions, basically they actually initiate a process, or run a particular process to create, or to push the details of this sales order and the shipment activities. They actually run a process to push the invoicing generation process, okay, or to create the invoice activity in the accounts receivable. So with that, what happens is, there is a certain auto invoice creation process happens in receivables, and the invoice gets created. Okay, the invoice gets created in the receivable module. Okay, now in the receivable module, then all the aspects related to invoicing, like the review of the invoice that is created, the completion and of the invoice, then printing of invoice, and emailing it out to the customer. Multiple modes can be there. Either a print can be provided, or what do you say, email can be sent. So there are many setups available with respect to that, and then the invoicing activity completes. And based on the payment terms, okay, that has been entered, or your payment terms that you mentioned, and have been entered into with the supplier, okay, or have agreed with the have agreed with the customer. Based on that, on a particular date, the invoices become due. Okay, so there is a due date recorded on the invoice, basically. So based on that, the invoices become due, and then on the due date, or maybe after that, depending upon whatever the scenario is, the customer, okay, would make the payment. Okay, the customer would make the payment, and for us, from a receivable department perspective, it would be what? It would be a receipt creation. Okay, basically you are creating or recording the receipt, and then the receipt that has been created, okay, we receive the bank statements, okay, at the end of the day, or maybe on a weekly basis or maybe on a fortnightly basis, we receive the bank statement. Okay, and in the bank statement, that particular cash or bank transaction, okay, with respect to the received receipt would be reflected, and then you would reconcile it. Okay, so there is a reconciliation activity that happens. So cash management module, when we have a look at, definitely we will understand that reconciliation part. Okay, and at each of these phase, okay, ideally here it is mentioned transfer accounting to general ledger, but actually at each of these phase, okay, from ordering, till the cash management cycle, in each of these phase there is an accounting activity also that happens. Okay, and the resultant entries are transferred to general ledger application, because as I mentioned, the general ledger is what? General ledger is the final books of accounts, where basically all the what do you say, all the accounting related data is stored, and then the underlying journal entries are stored, and then finally the financial statements are generated from GL, right? Okay, so as part of that, you will the accounting activities or the transfer of accounting to general ledger happens. Okay, now the for all these, basically there is a customer master that has to be maintained. Okay, just like in case of the P2P cycle, we have seen that supplier master is something that has to be maintained if at all procurement is required, or in the same way if the invoicing activities for payables has to be done, then for all those processes the supplier master was required, right? The same way, it is the customer master that has to be maintained for creation of sales order, for that matter, or for that matter any other the following activities. Okay, the remaining activities, you can say, for all these processes the customer master is to be maintained. So for again, just like we did for the setups for supplier, the same way we will also do the setups for the customer data, or the customer master. Okay, and then there are a lot of other setups that has to be done for enabling the entire process for order to cash. So for the order management, there are many setup that has to be done, and then for receivables also there are many setup that has to be done. Okay, now order management, the order management application we will not be having a look at. Just for your understanding of the entire O2C, order to cash cycle, I have explained this slide to have the understanding of the process, the general process that is there in the business, and in alignment with that, what is the cycle that happens in Oracle. Okay, so that is for just for that I have explained this entire cycle. Okay, what we will be looking at specifically is the receivable module. We will understand the basic cycle, the basic processes that can be done in the receivable module. That is what we will have have a training. Okay, now with respect to, as I mentioned, with respect to each of these processes, there are certain accounting entries. Okay, now accounting entries also, it is good to have an understanding of that at the beginning itself, so that there are certain topics that would be covered with respect to the processes that are there. So therefore, at the beginning itself, if you have an understanding on that, it would be easier for you to catch up once the transactions are being created. So accounting entries, if you have a look at, so first is the sales order entry. Okay, just like we had in P2P cycle, it was the purchase order entry, right? Now in case of O2C cycle, it is the sales order entry. Okay, at the sales order, there is no accounting. Okay, at the sales order, there is no accounting entry. Then sales order pick happens. Okay, sales order pick as in from the stores. Okay, basically from the inventory warehouses, based on the order that has been that we have received, or our company has received, based on that, a pick, sales order pick will happen. So from the sub inventory, okay, to inventory, there is a picking happening. Okay, so sub inventory, or the accounting entry will be credit, sub inventory account credit to another sub inventory. Okay, so that is just like inventory to inventory transfer. Okay, and then finally sales order issue happens. Okay, sales order issue means basically the order is fulfilled, you can say. Okay, so at that point of time, when the issue happens, cost of what happens is the just a minute. Okay, what happens is the cost of goods sold. Okay, that will get debited to sub inventory account. Okay, the sub inventory gets credited. Okay, so what is happening is the cost of goods sold related to the sales, it will be recorded in the P&L as an expense. Okay, until now it was there as a part of the asset. Now it has been expensed out. Okay, so basically you are sending it out. Okay, so cost of goods sold to sub inventory account, that is the accounting entry that will happen. Okay, and from there what happens is the transaction. Next thing is the transaction happens. Okay, now in the transaction what is happening is the invoice, okay, basically gets pushed. Okay, gets pushed to the I will have to check this accounting entry, sorry. I will let you know after there is it seems there is some issue with this, but yeah, I will let you know on that. Okay, so basically in the transaction level, when the invoice is being pushed, okay, invoice is being pushed to what do you say, the receivable module. Okay, what happens is this is the accounting entry that happens. Transaction level means invoice creation. Okay, transaction level means invoice creation. So what we need to emphasize more is on this transaction. So the process from this level, transaction level, until this receipt with remittance method. Okay, so when invoice is generated, okay, basically through the process of auto invoicing, so from order to order management module, auto invoice process runs and it pushes the purchase order or the invoice lines, okay, to receivable module where the invoice will get generated. Okay, and this is the accounting entry that will happen. Okay, receivable account will get credited. Okay, sorry, receivable account will get debited, and tax, freight, and revenue account. Okay, so all these will be considered as a revenue component. Okay, so therefore anything related to that, okay, the tax will get credited. Why tax becomes a liability for us? Okay, because we need to submit it, or we need to clear it with the government authorities. So that is where it is created as a liability. And revenue and freight, it is kind of an income for us, so therefore it is credited again. Okay, so that is the accounting entry that happens in case of the invoicing. Okay, now once the invoice has been sent out and the invoice accounting has been completed, I mentioned, right, the receipt or the payment receipt activity happens when the customer sends you the payments. Okay, so there are also two methods under it. Okay, receipts with no remittance and receipt with remittance. Now, what is this receipt process or remittance process basically? Okay, so just one moment. Sorry. Okay, what is this remittance process? Okay, so basically there are multiple types of receipts that we get, right? So maybe the customer is sending you checks, okay, or maybe some instrument, some other instrument, or maybe they are doing a direct transfer. Okay, now remittance generally as a process comes up in the case of check as an example, we can say. Okay, and no remittance will be kind of a process where they are sending you a let's say an electronic fund transfer. That means directly a wire transfer or a online transfer that they do, okay, from their bank account. Okay. Now, in case of check, what happens is we have a stage where we receive the check from the uh, what do you say, from the customer. Okay, it comes to our office. That check comes to our office, and then we at the end of the day, the accounts receivable person, they might create a deposit slip. Okay, and they will actually submit attach that check along with the deposit slip, and then send it to bank, okay, through some collection or person agent who would be there, who would actually pick it up and send it to the bank, go to bank and submit it on our behalf. Okay, so that stage, that entire stage, okay, from the time the check has been received and from there until it gets cleared in the bank, okay, that phase is called the remittance phase. Okay, so in case of wire transfer, there is, or wire transfer as in, I mean to say the online transfers and all, there is no such stage. It is directly, the what do you say, the customer transferring the amount directly to the bank, and then the bank clearing it out. Okay, so that is only the direct stage, and hence it is called as no remittance. Okay, so there are multiple processes under it. Once the receipt has been received, when there is no remittance method, this is the accounting that happens. Okay, so cash account is debited and unapplied account is credited. That why is this unapplied account? The reason being, immediately when you receive the receipt, it might not be clear. Let's say you have received the fund transfer in your bank account. You received a notification, and then based on that, you created the receipt in accounts receivable. But then maybe and may not be at that point of time. Okay, you don't know the, what do you say, the invoice, the customer transaction or the invoice against which you need to apply it. Okay, so generally you might not know until and unless you receive an intimation from the customer that this is against this particular invoice that we have made the payment. Okay, until that time, you might not know, okay, basically what against which invoice you want to apply it. Okay, so therefore, you would say you would just record it. Okay, the receipt, you would record it in the receivable module against the customer, and this is the accounting entry that will be applicable. Cash account debit to unapplied account. Unapplied, basically in the unapplied account, it will be parked. Okay, because you have not yet reduced the receivable. So it is kind of a temporary account where the accounting will happen and be parked. Okay, then when you get a intimation or maybe a remittance letter, okay, from the customer saying this is the this fund transfer that has been sent, okay, is against certain so and so invoices. Okay, so in such a scenario, what you would do is, the next step you would do is the application of the receipt. Okay, so at that point of time, you will apply the invoices against the receipt, and then unapplied cash account, okay, unapplied cash basically will get debited, will get knocked off, and the receivable will be credited. Again, the receivable that was raised at this phase, okay, that will be reduced. Okay, so that is the accounting entry at the time of receipt, when with no remittance, and when basically you don't know the transaction. You know the customer, but you don't know the transaction against which it needs to be applied. Okay, now there is another case also. This one, the second case, cash account debit to unidentified cash. Okay, and unidentified cash account to unapplied cash. Now, what is this? Okay, so basically, this is a case when you don't know who is the customer that has sent you the fund or fund transfer. Okay, it is just that it mentions that it is a receipt against a particular invoice, or no, it doesn't mention the invoice. Rather, it just mentions that it is for the sales. Okay, sales that was received. So in that case, what it would be, it has come to your bank, the fund has come to your bank, but you don't know which customer has sent you this. and even you don't know which transaction it is supposed to be associated to. Okay. So in that scenario, what is the accounting that happens first? You record the receipt, cash account is recorded. Okay. And then unidentified account, it will be parked, that particular receipt will be parked in an unidentified account. Okay. In case of receipt without customer details. Okay. And when customer is identified, what will happen is the accounting entry. So you will go to the receipt and you will assign the customer detail. Okay. And the accounting entry at that point of time, sorry, will be recorded as unidentified account being, closed out. Okay. And it transfers into unapplied account. Okay. It transfers to unapplied account. Why? Because customer has been identified, but still, you haven't applied it to any transaction. Okay. And then the above cycle will follow. Okay. Like, once now the customer has been identified and the customer has been associated, and this is the accounting that will happen. And then after some time, you would also get a remittance advice from the customer for the invoice that needs to be applied, and hence, this application. Okay. Unapplied account to receivables will happen when the application of the receipt to the invoice is done. Okay. So this is how basically the accounting entry will happen in two different scenarios. The first scenario, under remittance with no, under receipt with no remittance, is this one. Okay, where basically the customer was known, but the invoices against which the application had to be done is unknown. Okay, and then there is the second case where the customer itself is not known. Okay, receipt has been received, but customer itself is not known. But in that case, this is the accounting that will happen first, which will be followed by unapplied account to receivable when you apply the invoice. Okay. That was the case when there was no receipt. Okay, no remittance. Sorry. Okay, no remittance, as in that particular stage when there is a there is a time frame between the check or the document that you have received and until the time it clears. Okay, that phase is not there. Okay, so that is called a no remittance. Now we will see the accounting entry in case of receipt with remittance method. Okay, so only point is cash is something that will be hit directly. Okay, when there is no remittance method, cash is something that will be hit directly. Okay, as soon as you record the receipt. But then with the remittance method, there is a different approach. Okay. Sorry, I'm having a cold, so okay. All right. So at the time of receipt entry, with remittance, okay, when there is that particular stage, okay, as I mentioned, from the time of receipt of the document or the payment instrument till it is getting cleared from bank. Okay, and in that particular mode or in that particular method of receipt, at the time of entry of the receipt, this is the accounting entry that happens. Okay, so confirmed receipt account debit to unapplied account. Why is it a confirmed receipt? Because you have received the instrument, okay, from instrument of payment from your customer. That means it is a confirmed receipt. Only there is a phase where you just need to go to the bank, okay, and get it cleared. So that is the reason it is confirmed receipt, but not a cash. Why? Because it has not yet been cleared from the bank. Okay, so we are recording those stages. In fact, okay, in the accounting, we are recording those stages. Okay, and it is parked as unapplied because we might not be knowing the invoices. Okay, and then what happens is uh, a remitted receipt account, okay, to confirmed receipt account. This is the next entry that happens. Okay, so what will happen is you actually have received the check, let's say, and then you are sending it to by you are filling up a deposit slip and then going to bank and submitting it. Okay, so in that phase, when that transition phase is there, okay, so as soon as you create the deposit slip, so a record you will create in receivables as well for that particular process to record the deposit slip number and all. Okay, so that after that you do an accounting entry will be generated in Oracle, which will be remitted receipt account to confirmed receipt. Okay, this is the accounting entry that will happen. So confirmed receipt that was there, it will get knocked off and it will be parked in the remitted receipt account. Okay, and then finally, once the cash is cleared or the check is cleared, okay, on clearance of the check, okay, what is the accounting entry that happens? So you will come back to your what do you say, cash management module, where when you receive the bank statement, that is when you will know that the check has been cleared. Okay, so when you reconcile it, okay, or clear it out in the cash management by doing the reconciliation activity, at that point of time, this is the accounting entry that will happen, the last leg. So cash account will get debited and the remitted receipt will get knocked off. Okay, where it was parked until that time. Now, you might ask, why maintain a headache for all these stages? So this is actually a proper way of accounting. Okay, with respect to the funds, okay, each stage of the fund is identified, or at the financials level. Okay, what is the status of the fund, at what place it is, and it helps the management to take or make better decisions. Okay, to take better decisions with respect to the cash and bank balances they have. Okay, so that is how each stage is being recorded for. Okay, so this is the entire cycle that you will have a look at, or we will have a look at, when we do the transaction and then the receipt and then the remittance methods. Based on that, we will see the accounting entry that happens. Okay, all right. Now, as part of the course, or as part of the training, what all things are we going to do? Okay, so basically all these setups we will do. Okay, the reason being, these are all the bare minimum setups that are required to do the basic cycle of transactions. Okay, receivable system option. So basically, this is the main configuration, the heart of the configuration of receivables. Then based on that, there are other things that also you will have to create. Okay, like in case of fixed assets, we had system options, right? The same way in case of receivables also, we have receivable system options configuration. Okay, then we have the certain transaction types that has to be created. Okay, in case of payables, we had transaction types like standard invoice, credit memo, debit memo, right? So that was already available as part of the module. Okay, pre setup. Okay, now in case of receivables, it is slightly different. Okay, for Oracle based transaction types will definitely be there, but then based on the business requirement, you can create different types of invoices and credit memos and debit memos. So the main class remaining the same, you still can create different transaction types, because generally what happens is the businesses, they would want different types of invoicing for the different services that they are providing. Okay, accordingly, they would want the accounting entries on the invoices to record the revenues. They would want it. Okay, so that is why Oracle has given you an option where you can define custom transaction types. Okay, but then the underlying class will be the same: invoice, credit memo, debit memo. The nature of it will be these three. under which you can create. But then you can create multiple invoices types, similarly multiple credit memo types and multiple debit memo types. Okay, according to which the accounting or the revenue, say similarly the receivable accounts can be defaulted separately on each of these transaction types. Okay, just a minute. All right. Similarly, define transaction sources. Okay, so for each type of transaction, you can define the transaction sources. Okay, whether it is a manual source or whether it is a source from where the invoices or the documents basically or the transactions you can say is being imported, or is it a manual creation. So based on that you can create different transaction sources, and there are some of the aspects like the document numbering that is governed at the transaction source level. Okay, then we have auto accounting configuration. This is also a mandatory configuration. Okay, now what is this auto accounting configuration? So basically, uh, there is a setup where you can provide the rules related to, the accounting combinations being derived. Okay, like the revenue account, similarly the receivable account. Okay, similarly, there are multiple other cases. Okay, for which which we will see definitely, for which the accounting rules can be defined. Okay, so from there you need to pick the account combination. Like in our case, in case of payables, we had, right. There are two layers of, like, supplier liability. Let's say, for example, it is there at the supplier level that you can define supplier site assignment level, and then there was invoice option level also where you define, and then automatically system would consider supplier site assignment as the priority, and in case of on the supplier side the liability is not available, then it will go and pick from the invoice options related to the business unit, right? But that was an automatic process. Okay, but in case of AR, it is not an automatic process. It is something how we define it. Okay, there are certain places where we can give those account combination. Okay, and then we tell the system from where to pick it. Okay, so according to our requirement, our business requirement, we tell the system to pick it. So that is where auto accounting configuration is there. Okay, so that layer is something that we have to define. Okay. All right. After that, we have the other aspects. Okay, the setups, the other setups like create payment terms. So this you have seen in case of the payable also. Then create statement cycle. Okay, statement cycle. Why? Because statement generation has to be done. Okay, because every monthly or every fortnightly or every weekly, you might want to send a statement, outstanding transaction statement to your customer, so that the customer makes timely payments. So that is where statement cycle can be created, and that can be scheduled such that the emails are being sent out after generation of the statements. Okay, and then we have reference data set. Reference data set as a concept, you have already understood what a reference data set is. So in case of fixed assets, we have seen like depreciation method is there, and that depreciation method is associated to a reference data set. Okay, now what are reference data set? Again, to have a recap, the reference data set is all about creating a additional control, okay, or a security layer for certain type of data objects. Okay, so that is what reference data set is all about. Now reference data set is crucial from AR perspective. Why? Because it is based on the reference data set that you give the assignment of the or access of the customer sites. Okay, so that is why reference data set is something as an important or a mandatory part to be created in case of the customer sites. Okay, Then assigning the reference data set to our business unit. So basically, how to assign that reference data set so that based on that, our business unit will, be able to access all those. Whenever we perform a transaction in that particular business unit, all the customer records, the customer master data records can be accessed. Otherwise, the access will not be available. Okay, then creation of the customer, we will see creation of the customer site address, creation of the remit to address. Okay, these are all mandatory. Okay, then memo line creation. Okay, memo line creation is kind of different based on the different services. Okay, you want to create certain revenue lines. Okay, so in that case, memo lines, come up as a part, and then based on those revenue lines, certain account combinations you can put there, and then you in the auto accounting options you can instruct the system to pick the revenue accounting combination from the memo line level. Okay, so we will have a look at those as well. Then there are certain receipt related setups. Okay, create receivable activities, then receipt class and methods, create receipt source. All these are certain of some of the setups that these three, okay, that govern the receipt activity. Okay, so that we will have a look at. So see, from payable, if you compare payable and receivable module, receivable is a little bit more complex. Okay, there are a lot of things that can be done in the receivable modules. There are a lot of activities that can be done, and the basic activities also, there are a lot of steps, setup steps that are required. Okay, so might be a little bit confusing, but then with time and with practice, you will definitely gain your hands on on this particular module. Okay, all right. So today let us have a okay, let me just explain the transactions aspect also quickly. Okay, so in the transaction process, we will see the invoice or transaction creation. Then against that, we will see the receipt creation. Okay, then we will see credit memo creation and applying it against the invoices. Okay, then the debit memo creation, then transaction with memo lines. Okay, that anyways will be covered in part of invoice. Okay, then we will have a look at, so not all of them we will be covering because we have some time constraints, so therefore we will not be covering all of them, but yes, certain space specific and basic processes we will definitely cover. Okay, then like the receipt reversal is there. Okay, said then debit memo reversals, then receipt write off, customer refund, aging. Okay, then we will have a look at let's say balance forward billing configuration. Okay, reviewing the customer balances, customer account details. Okay, so the majority of the ones which are basic, okay, for your understanding to complete the basic cycles in the receivable module, that we will be covering. Okay, we have some time constraints in I'm planning to complete the course by the end of this month, so that is where we will have to be a bit precise and a bit quick on the receivable training. And after that, we have one more small module which is cash management. Okay, so cash management generally takes around 4 days or 5 days maximum, not more than that. Okay, so in accordingly, I will have to complete all the aspects. So what I have is around 15 days time from today. So in 10 days, I need to complete the receivable, and the remaining 5 days, I need to complete cash management. So that is how my pace would be. So just request you to catch up, and if you have any questions, definitely we can take it up after the session, or maybe towards the day in the afternoon or something, where we can discuss out if you have any questions around it. Okay. All right. Let us have a look at the receivable system options configuration, which is the first level of configuration. Okay, going to setup and maintenance. Okay, first thing is enabling the BU for receivable, activities. Okay, so let us have a look at that. So assign business unit, business function was there, right? Which we have already covered, but still I would like to start with that. Okay, so because it is based on the business unit or under a particular business unit that you do all your transactions. Okay, so that is the reason why I'm starting with that particular aspect. Assign business unit, business function. So this one, assign business unit, business function, and select your scope as the BU in which you are doing the setups for AR, and as well as under which you will be doing the transactions. So that BU related scope we will select, and then we'll go inside the task. Okay, now you see here how does this particular business unit become enabled for customer or AR activities by enabling these checkbox: billing and revenue, customer payments, okay, customer contract management, okay, receiving is not for that. Receiving is related to procurement module. Okay, so with this, basically these particular things, billing and revenue management, customer payments. Okay, so basically based on these two activities, it becomes enabled for the billing and the customer payments in the receivable module. Okay, so just I'm showing it to you. So generally this setup is done at the beginning itself, considering all the different functions under which will be using the ERP or a ERP. So based on that, in the beginning itself, when business unit is created and the business unit setups are completed at that point of time itself, all are enabled. Okay. Generally, as a practice, we enable everything, even though they might not be using or they might be using. Still, we enable everything. Then only based on the remaining setups only they will anyways be able to use the application. If the remaining setups, if let's say for example one of the module they are not using, and we will not be doing the remaining setups. So generally as a practice, this particular option, everything is enabled at the beginning of the implementation. Okay, that was the first thing. Now let us have a look at the receivable system options. So that is where the task name is called manage receivable system option. Okay, here you will add, okay, the receivable system option you will add here. So click on create. Okay, select the business unit. Let me click on that, search it out. Search. Percentage. Very weird. When we are searching it, it's not coming in. Now it is. Okay, anyways, no issues. Select it by scrolling down, and business unit is selected and the underlying ledger is also selected. Okay. Now there are two options: billing related options and cash processing related options that you will have to configure. Okay, split amount is basically to split the amount that divides for reporting purpose. Okay, this is for reporting of invoices which are over and above this amount. Okay, so that you can enter. So let's say if you give $100 amount, then in that case, over that amount and under that amount, whatever invoices are there in that order, the reporting will be done. Okay, so that is the only thing. Then days in day sales. This is something related to sales outstanding calculation. Okay, so this is for some of the aspect related to sales order, I believe. I'm not that sure. I'll have to check on that aspect. But yes, zero will not impact you. You can keep it as zero. Okay, then application rule set. Okay, there are certain application rule sets. So basically, how the application needs to be done. Okay, so those application related aspects you will have to select. Okay, so it is kind of a rule set that can be defined. So you can say prorate all among all line types. Okay, and then what is this particular application rule set for the discount? Okay, like whether for discount basis, what is the discount basis where it should be calculated, whether it is the invoice amount or lines only, or lines and freight and taxes, and lines freight, not freight items and taxes, depending upon whatever you want. According to that, you can select the discount basis. Okay, so I will say invoice amount. Okay, that is how it will be selected. Then there are certain check boxes here. Okay, like require salesperson, print remit to address, and print home country. Okay, so basically what are this for? Require salesperson. If a salesperson is required, so that each invoice that is created against that a salesperson record can be associated, then you will have to create, you will have to enable this. And then there is another configuration related to salesperson creation that has to be created, but not required for us. We'll just have a look at this: print email, remit to address, and print home country. So this is for printing the remit to address on the invoice, where the checks, let's say for example, the remittance need to be done by the customer, then what the address to which it needs to be sent. So that is what this is all about. So printing it on the invoice. Okay, and then printing home country. So home country you will have to select. So default country you will have to select. So since all our setups are related to United States, I will say default country as United States. Okay. Now, regarding discounts, we have allow unearned discount, discount on partial payment. This is all setups related to discount application. Okay, so if at all unearned discounts are to be allowed, then discounts on partial payments. So whenever there is a partial payment, if discount needs to be applicable or not, okay, or only on full payment, a discount should be allowed. Then in that case, you will have to enable this. Okay, allow any business unit to process the receipts. So this is a actually kind of cross business unit functionality. Okay, that means on behalf of on behalf of one business unit, another business unit can process the receipts. Okay, so invoice might have been generated by one business unit, but then against that business unit, sorry, against that invoice that is created in business unit A, let's say for example, business unit B can receive the receipts. Okay, so that is where allow any business unit to process the receipts. So they can process the receipts. Okay, so that is kind of an advanced functionality. You can practice it out or explore it further later when you have a hands-on on the basic processes and the basic cycles. Okay, now bank account remittance method. Okay, now this is bank account receipt method. So basically, what is the receipt method as a default that you want to associate? Okay, for this particular business unit, so that you can associate it. But for that, once the receipt methods are to be created first. So that is the reason it is not a mandatory option here. Even it can be updated later on as well. Okay, let us go to the accounting. So for the accounting, these are the key accounts that you will have to provide from a system option perspective. Okay, so tax account, then cross currency rounding account, realized gain, realized loss accounts. Okay, that you will have to provide. Okay, so this is mandatory. So provide that. Sorry. So I hope you understand that whatever is the account combination, generally, in the implementation cycle, these things we will ask the customer to provide. Okay, so entire account combination that you can provide it. I will explain it quickly. And then certain options related to automatic journal import. So the journal imports can be done automatically. Then the header level rounding is something that you want, that at the header level the rounding can happen, rounding of amounts. Okay, then that is something that you can enable. And then days per posting cycle. Okay, so what is the number of days per cycle that is the posting cycle is there? Okay, so what is the number of days between that? Okay, so anyways, that is not something that you need to be concerned about. So at this stage, so you just understand that these are the accounts that you need to provide. Okay, then transaction related options like tax invoice printing options. So how do you want to print the tax invoices? So based on this, you will see different changes in the invoice output. Okay, when it is printed. Then document number generation level. When should the document number be generated? Okay, based on the sequence that you have created, or there will be a sequence that you will create. Okay, then based on that, when should the number be generated? When the invoice is saved, created and saved, or created, saved and completed. So there is a completed status. So at that point, do you want it, or at the saving level itself, the document number should be generated? So what is it, or how do you want the number generation to happen? Okay, if at all you want changes, any changes that can be done to printed transaction, that means once a invoice is printed, after that you want to change anything, should that change be allowed or not? Okay, that is where you enable this if at all required. Okay, but generally it is not allowed. Allow transaction deletion, whether you want an option for deletion of the transactions or not. Okay, you give the access of deletion to your account or not. Okay, so that is controlled from the receivable system option. Enable recurring billing. Recurring billing is kind of a recurring billing functionality. If that needs to be enabled, that the first step is enabling at this level. Okay, then following the required. Then transaction delivery. So invoice delivery using email. If you want, as soon as whenever the invoices are created, okay, the delivery of it should happen using the email. Then for that, you need to provide certain mandatory informations which is part of the setup. Okay, so here from email, so your email ID. Okay, from which email you need to set the emails. Then from name, the name that needs to be populated as from name for the email. Then reply to which email can they reply? So it will be recorded. Okay, it will be something that will be displayed on the email. Then email subject. So what is the subject that you want to be displayed? Then which are the business? Do you want to include business unit in the email subject or not? Do you want to include the invoice number in the email subject or not? Okay, email body. What is the message that should be displayed in the email body? Okay, that you can disable, enable. So this is all for the state transaction delivery. That means the invoice delivery using email. Okay, similarly for statement delivery also, you will have to provide all the other information like this. If you want the delivery to be done through email, via email. Okay, sorry. Then there are something related to late charges. If there are late charges, then late charges need to be calculated, and then what is the basis of calculation? What is the type of interest invoices that needs to be created? This can be considered as advanced functionality, which you can explore later. Then customer. For the customer, what is the grouping rule, or how the grouping of customer need to happen? Okay, so basically this is with respect to the invoice grouping. Okay, so whenever invoices are imported, okay, through the FPDI mode or through API mode, then in that case, what is the default grouping that you want to associate? So generally you can associate the seeded one, which is created by Oracle, which is default. Okay, but then we will understand the grouping rules later when we use the FPDI process, because that is where this is required. Okay, auto invoice, certain related to auto invoice process, certain things that you can enter to control the memory level and the maximum memory used, and message level, the log file message level. For that, you can input certain aspects, certain details. Okay, so this will actually help in the processing to to streamline the processing activity. Okay, so during the processing, there are certain memory, maximum memory required. So what is the memory that can be utilized in that process? Okay, so this is for proper or functioning of that particular program, the auto invoicing program. Okay, then we have certain cash processing. For the processing of cash, what are the different things that you want? Okay, I think we will cover that tomorrow. Okay, so just for today, this is what we are covering: billing and revenue options. Okay, cash processing options we will cover tomorrow. All right, that's it, guys. Thank you and have a good day. If you have any questions now, you can ask.